See, volatility is a fundamental characteristic of an equity market, and it's never easy to time the markets. Having said that, let's look at the tailwinds which are supporting the Indian equity markets. Let's first look at the GDP growth. Indian economy is growing consistently at a 7% plus GDP growth, and currently the economy, which is at $4 trillion, is likely to become 5 trillion soon, and then we expect to move further from there. So it's one of the fastest growing economies in the world, if not the fastest growing economy. Secondly, look at the other macroeconomic indicators. Inflation was an issue, but now with CPI at 5%, we are expecting the inflation is getting in control. Also going forward, we think that the interest rates have peaked out and we should expect RBI to cut rates from here onwards. Also, let's look at the liquidity and the valuation of the Indian equity markets. Liquidity, when I say, there was a time 5 to 10 years back when one of the key players in the Indian equity markets was FIs. Today, the participation of the domestic investors have made the markets far more broad-based. I mean, look at the numbers. 20,000 crore of monthly SIP flows are good enough in themselves to kind of take care of any FI pulling out the money from the markets. And it's given a lot of broad basing as far as the markets are concerned. Similarly, look at the participation of the households. The numbers have gone up considerably over the last few years, which means that more and more households are participating in the India equity story. And also look at the valuations. While valuations of the markets may look a bit stretched, and they are, we are not denying it, the reality is they have been supported by the corporate earnings, which have been growing at a reasonable rate over the last few years and are expected to go up further. Yes, having said that, the valuations on the mid cap and the small caps are stretched, but we think there is value which can be looked at from a large cap stocks point of view. See, there are certain sectors which today the investors can consider for equity allocation. I'll start with manufacturing. Manufacturing as a sector has been doing reasonably well over the last few years. This was largely post the government announcing the Make in India, which was to promote manufacturing in our country. The government announced the production linked incentive plans to encourage manufacturing in India. And look at one big change. India used to be a net importer of mobile phones, and come today we are a net exporter of mobile phones. Apple today accounts for 12% of its supplies on the mobile phones from India, which is likely to move up to 25%. Logistics cost is another important one. See how the government has been making allocations towards capex. This budget made an allocation of more than 11 lakh crore towards infrastructure. Now, infrastructure is very critical because your logistics cost, which is a big cost for a manufacturing company, is today approximately 14%. For the manufacturing to be competitive, even for the purpose of exports, with the high investment in infrastructure, it is likely to come down to 8 to 10%. So these are the policy initiatives which the government has taken to promote manufacturing. Also, let's look at the taxation rate for a new corporate in India. At 15%, the government is promoting a lot of new companies to set up manufacturing in our country. This is one of the lowest tax rates anywhere in the world. The PMI has been constantly at an average of more than 55 plus, which shows a reasonable expansion as far as the manufacturing space is concerned. Also at the same time, most of the large corporates, the global corporates, are doing a China plus one policy for their supply chain diversification, and that is an opportunity which India is also looking at capitalizing on. So I think manufacturing as a sector looks a very, very interesting sector, and all the investors should look at some portfolio allocations towards this. The second sector which I'd like to mention is the pharma and healthcare sector. And I think the addition of healthcare is very important here because it signifies a larger ecosystem which includes hospital chains, diagnostic chains, and even insurance companies. See, pharma is a very defensive sector from an investor point of view, and it will not get too much impacted basis the downturns in the market. So that's another advantage when you invest in a pharma and healthcare sector. The other thing which I'd like to share is it's an ever evolving sector, and because of the ever rising lifestyle diseases, medical improvements, and a high demand for vaccines and medicines, it is consistently growing. The other advantage which the Indian pharma companies enjoy over their Chinese and Mexican counterparts is that the US FDA approval track record for the Indian corporates is better. Not to forget that because of the R&D investments and the lower production cost, India is becoming an export medical destination. So these are some of the advantages which the pharma and healthcare sector today enjoys in the Indian market, and investors should kind of look at this closely. Another sector which looks very interesting is the banking and financial services ecosystem, which includes the banks, the NBFCs, and now even the fintechs. I think a good regulation is really helping also. If you look at it, India is growing at a GDP of 7%, and it's said that the BFSI to support this kind of a GDP growth has to actually grow at 2x. So there's a natural tailwind as far as the growth in the BFSI is concerned. Now let's look at some numbers. If you see, the bank nifty has delivered almost 12% CAGR over the last 5 years, and the growth in the earnings for this year in the first quarter has been more than 20%. So clearly there is a earning growth which is helping the sector. Also, if you see, the banks have had a very good period post-COVID, which was marked by a high credit growth, which was in somewhere between 16 to 18%, and very low NPAs. So which means that most of the banks today have a very strong balance sheet. And tomorrow, if the corporate capex cycle starts, the banks are in a good space to continue with the credit growth. The challenges as far as BFSI has today is that the deposit mobilization has been a bit slower, and there has been a margin compression as far as the NIMs are concerned. But we believe that with the interest rate cycle almost peaking and with the rate cuts expected going forward, they would be also taken care of. So overall, I think a very interesting segment, and we genuinely believe that there is an opportunity of investing in this space also. See, we have seen a lot of volatility in the equity markets recently, post the budgets, then the geopolitical conditions, and now recently the yen unwinding impact on the equity markets, not only in India but across the globe. Having said that, we think that these three sectors, namely the manufacturing, the pharma and healthcare, and BFSI, hold good investment opportunities.